Hi everyone, let's take a look at this statement of cash flows problem where we'll explore the indirect method by focusing on problem 14-1A. We've got the comparative balance sheet of Oak and Tile Flooring Company for June 30th, 2008 and 2007 in front of us. And let me slide down. We have the data that you can see there, and then we have looks like 6 different areas or 6 different comments that is being provided to help us prepare a statement of cash flows using the indirect method. And those 6 comments right there to the right of my mouse is equipment and land were acquired for cash, no disposals of equipment during the year. The investments were sold for $45,000. Common stock was issued for cash. There was a $65,900 credit to retained earnings for net income, and there was a $50,000 debit to retained earnings for cash dividends declared. Okay, now with this data up here, what I like to do is account for every dollar that's changed. So I've worked a little bit of this ahead of time, and let me show you what I've done. Let me slide here. Okay, I have the exact data that appeared above right here on the screen, where I've put in the dollar amounts at 6/30/2007 and 6/30/2008, and then I've simply entered an increase or decrease over time. Okay, so as an example, cash dropped from 34.7 to 23.5, so that's a decrease of 11,200. And then I just worked that, I copied that same formula all the way down, so we have that data in front of us. With that, then I think we can begin working on the statement of cash flows. Now, I've also, to save time, put a little bit of this statement on the screen in front of us. So we've got to come up with the Oak and Tile Flooring Company statement of cash flows. We always start with net income, and they told us that net income, there was a $65,900 credit to retained earnings for net income. So let's drop in that $65,900 because we know that value. And you know, one thing I want to do, let's merge this. Let me wrap this just so it doesn't get in the way of our numbers. Okay, so net income was $65,900. We'll jot that down. And the next thing we need to consider is we need to consider the adjustments to reconcile net income to net cash from operating activities. Normally the first one to think about is depreciation, and hopefully we know something about depreciation for the year. Let's see. Okay, they tell us that equipment and land were acquired for cash and there was no disposal of equipment during the year. So I think what that tells us is let's look at equipment and land. There's no depreciation on land, but equipment went from $215,000 to $175,000. That's a drop of $39,500. And actually, now I see a complete error on my part in staging this. This is actually 6/30/2008, and this is 6/30/2007. So now, with that information, let's make sure that's right. 34.7 was 2008, 23.5 was 2007. Now we need to change that formula. Okay, and let's recopy that all the way down. And I know I'm doing some of that off the screen. Okay, now let's take it from there. Equipment then increased $145,000. Land did, and equipment went up $39,500. Accumulated depreciation went from $41,300 to $48,600. Well, that actually I'm listing it as a decrease. But because they're negative numbers, it really is an increase, right? The negative number got larger to the tune of $7,300. And since we didn't have any disposals, we know that all of that is caused by depreciation. Okay, so we can account for all of that and jot in that we had depreciation of $7,300. Okay, so let me indent this and say this represents our adjustment of depreciation. And the reason we have that is depreciation is a non-cash transaction. So if we start with net income and we've had a deduction of depreciation expense to reduce net income, we need to add it back because it does not impact cash, and we're reconciling net income to net cash provided by operations. Okay, now let's take a look and see if we have any other non-cash items that hit the income statement. It says the investment were sold for $45,000 of cash, and if we look, we had $50,000 of investment that went out the door. So we know $45,000 was cash proceeds, so we must have lost $5,000 on the sale. Okay? Now you see I'm accounting for all of the change. So we'll come over here and we'll write in loss on sale of investments. We indent that, and that's $5,000. Okay, the next item to consider would be any changes in current operating assets and liabilities. Now, I'm assuming there was no other items that impacted the income statement that were non-cash, and from those notes I don't see any. So now what we do is we consider the changes in working capital accounts except for cash. We're going to prove that $11,200. That in fact that's the answer to how much cash changed, and with the indirect method we can prove that number. All right, but accounts receivable went from 92.3 to 101.6, so an increase of 9,300. If we've had an increase in accounts receivable, then what that means is we've used extra cash to fund that increase. Or another way of thinking about that is accounts receivable grew during the year, therefore we collected less from where we were a year ago. There's a couple ways to approach that. So that 9,300 becomes a negative adjustment. Okay, I'll jump back here now. Okay, so we've accounted for that one as well, and I think what I'm just going to do is use the words done, right? We've accounted for that one, we've accounted for that one, and we'll just keep a note as we go. All right, we can look at inventories next. Inventories also increase, they move the same direction. So I'm going to just copy that and change the word to say increase in inventories. And that should make sense to you because again, if everything else is held constant and we have more inventories at the end of the year, then we assume we've used more cash to fund those. So that $4,200 increase in receivables shows up as a negative adjustment when we're reconciling net income to cash provided by operations. Okay, so that one's done. What other working capital accounts do we have? Well, that's it on the current asset side, right? The rest of these are long-term. But here's accounts payable. Accounts payable grew by $5,700. Okay, I'm going to jot that one down, and we're going to say increase in accounts payable. And anytime accounts payable increases, that means we're using someone else's money, right? So think about that as a positive adjustment when we're reconciling cash to reconciling net income to cash provided by operating activities. Okay, so that one is done. Accrued expenses also went the same way. So well, we have lots of increases. Increases in accrued expenses. And I'll indent that again so it lines up. And the dollar amount there was $1,800. Okay, so now if I copy there, that one's done. And what else? Do we have any other items to consider? Okay, we have one other working capital account, and that's dividends payable. But dividends payable, the change in dividends payable doesn't result in a change in net income. So it wouldn't make sense to show it in cash flow from operating activities because it's purely a financing activity. So let's leave that one alone for now. And let's compute our net cash flow from operating activities. Okay, so I'll put a title down here and I'll say this is net cash flow from operating activities. And I'll indent that. Actually, I think I'll go the other way. Put it right flush against the end, and we will sum all of these items. Put an underline here. We come up with 72.2. Okay. And now we can move on to cash flow from investing activities. And I see I spelled cash wrong. All right, well, what did we do with investing activities? We know we had an increase in land, and we had a sale of investments. Why don't we tackle that 45 first? We knew there was 45,000 proceeds. We're always concerned with the net amount, so we jot the net amount down. So we had cash. You could say cash received from sale of investments. You could say cash proceeds from sale of investments, and I'll call it cash proceeds from sale of investments, and that's 45,000 that was positive to us. We sold investments, so cash increased 45,000. Okay, then we had the purchase of land for 45,000, right, by looking at the change in the account. So let's jot that down, and we will say purchase of land. And the purchase of land was a large dollar amount, 145,000. All right, that explains this one. And we had equipment increased of 39,500. So we also had a purchase of equipment. And that purchase of equipment was 39,500. We show that as negative because it required cash to pay for that. And now we're done through there. That, I think, is all of our long-term investments. Yep, we've accounted for those. So we can then put a subtotal that says net cash used, net cash flow used for investing activities. Okay, you know what, I am going to go back and indent this so that the major ones all line up about the same place. Okay, sum that from here to here. We'll underline that. We've got 139,500. So the only thing we have left now is cash flow from financing activities. I'm going to slide this up. And we have to take a look at our financing. Okay, we had dividends payable, we had common stock. Look, common stock changed by 6,000. Looks like we must have issued common stock, but paid in capital also increased. So if we add those two together, it looks like we issued common stock for a total of 126,000. And they tell us that in note 4 to the left of my mouse. Common stock was issued for cash. So if we combine that, we have an item that we would say sale of common stock. You might say cash received from common stock. I think both would be correct. And combined, that was $126,000. So we can jot that in. And now we're done with these two. All right. I'm sorry, I put that in the wrong spot. We're done with this one and this one. All right, what else do we have to consider? Well, we know there was some dividends, and let's think about how we got to that 15,900. We knew there was net income of 65,900, and if I subtract 15,900 out of it, then it means I've got another 50,000 change that I have to account for. And that must have been the payment of dividends, right? There's the 50,000 of debit to dividends, but look, 2,500 of it is the change from the beginning of the year to the ending year, shows up as an increase in dividends payable, which means we haven't yet paid that. So I think what we need to do is we need to take the 50,000 of the dividends and subtract out the dividends yet to be paid to come up for the difference. And once we do that, we're done. We can jot in a line item that says dividends I'm just going to say this is dividends. I'll call this dividends paid. Okay? You could say or dividends paid in cash, payment of cash dividends. Okay? And that cash dividends was the $50,000 that they told us about that was declared, but we knew all but $2,500 of it was paid during this period. And right now I'm going to show this as a negative amount. Okay? Just because that's how I prefer to do it. Some people might say less payment of dividends, but I'm just going to show it as a negative amount, and I'm going to add the title, Net Cash Flow Provided by Financing Activities. I'm going to indent that, again where it's lined up, do my little summation. Formula, I come up with 78.5, and we're getting near the bottom now. Let me slide a little bit. Okay, so now once we've done that, we should be able to prove the increase in cash. And I'm going to underline this and then just add the three subtotals together. Okay, it comes out to 11,200. That 11,200 matches that 11,200 right there. So we've done this correctly. And by the way, with those last two entries, we were done here, right? The 50,000 was the amount we calculated as what of dividends that matched the dollar amount. So we've taken care of everything. All right, cash at the beginning of the year is equal to that cell right there. And therefore, when we add those together, we should get the cash at the end of the year, which I think was 34.7. We'll take a look. I'll double underline that. And we're done with this problem. Let's make sure. 34.7 was the ending amount, and that's the 34.7. And that's this problem, everyone. That's how we would put together a statement of cash flow for the Oak and Tile Company. Okay, so there it is in front of you. Our answer comes to a change of 11,200, which matches the cash. We're all set. Thanks, everyone.